Hello guys, Steven Ducks here. So today we're gonna go ahead and review the recent trades. There are very similar patterns and actions. So we want to go over the details of all those trades and especially all those IPOs into the second day. They do have really profitable pattern, but also they do squeeze pretty hard, especially with the low liquidity. It's really hard to get your good entry and exit. So in this video, we're going to go over pretty much all of those technical analysis behind all those IPO plays. Other than that, we have a new course that already came out. I will link in bio, so make sure to check it out and let's get started. First of all, I want to go over ZURA. This is the first ticker that happened this week. It had very similar actions compared to AMBI. So if you take a look at it, same IPO, kind of similar price as well. Very similar volume. Traded about 6 million shares on the first green day. ZURA traded about 5 million shares. 4 million shares on the first green day. ZURA was a little bit more expensive compared to AMBI. The only difference between AMBI and ZURA is ZURA is a biotech, AMBI is industrials. So you can look at the performance on the second day. So go ahead, look at March 15th. Test the resistance, came all the way back down to 10, and this is a classic overextended gap down. Whatever you want to pay attention is the difference between those two charts. They look very similar. Volume. When you are dealing with the biotech sectors, you have to be really careful. They do not act very normal compared to other industries or other sectors. They also always pay attention to the morning weaknesses or afternoon weaknesses. So with AMBI lost about 50% on the first green day, there's going to be a lot of eager backholders wants to get out into the consolidations. So that's why you have the 18 rejection, tested 17 again, faded all the way back down. But if you look at ZURA today, it didn't really have the pullback like AMBI did. So that's one of the red flags. Number two is it had its morning weaknesses, test the resistance yesterday, came all the way back because the liquidity is really low. So tiny amount of volume can push the stock to $3 a share. So if you are going to size in a decent amount of size, these stocks are not for you. Always aim less than 1% of the volume being traded throughout the day. So let's say the stock traded around 1 million. You're only looking at to short maybe 10K. It has to be less than 10K. So the stock came all the way back up to test the high, consolidated. You can see that it did not crack even though it pulled about negative 30% after open. So this is why biotechs are not very profitable, because they do not perform the same and it has met pretty much all the conditions. It consolidated about 3 hours yesterday into the 30 to 38. The consolidation range is within 25%, right around that mark. Came all the way back, test 37, consolidate again. So you are looking at double resistance if it cracks. It turns out it did not crack. And we're going into the third day. So this is likely to squeeze even higher if it breaks the 37 area. So I would recommend avoiding overextended gap down on biotech, especially on IPOs. Not very profitable, not very ideal. Even though it has met pretty much all of the criteria. I would aim for something that's very similar to AMBI. First green day, it has to have a big pull before the close. Then we come back and test the resistance into the second day. Make sure that the stock is trading a decent amount of volume. You can see it traded more volume compared to ZURA. There is no U-shaped type of reversal. This one came all the way back, tested around 17. So if it tends to break out 18, you want it to size down, because whenever you see U-shaped reversal after a large pull, typically that's conflicting with the shorting factors. So that's something that you have to pay attention to. Alright guys, that'll be the end of this video. Thank you very much for watching. Make sure to check out the link in bio. I will see you guys in the next video.